Hi guys, quick update here for YouTube. SP 500 technical analysis Friday, 19th of August 2022. Hope everyone's doing great. So essentially the count on the S&P, I've now changed my count and I don't believe we're going to take out the June lows. I believe we are basically forming an ending diagonal, right? And we are basically transitioning from, 13-year, 90-year, 250-year bull market into a grand super cycle correction bear market. If you were to take a look at Tesla, that's a 1,000-year top on Tesla. Facebook, Google, they've all topped. It's only really Apple which can take this market to its peak. And, that's probably going to make a new high. Maybe we see 200 on Apple. The count is very, very messy. That could be a 1, that could be a flat 2, 3 into a 4. We're sort of forming the wave 5 here. Microsoft too. I just don't think Google's going to make a new high. So it depends what you're looking at here, right? It's impossible for Bitcoin to make a new high before it takes out, 15k, maybe even 10k to the downside. 69k is not going to get seen before those lower targets. Google's not going to make a new high here, we don't think. Now, so the bulls are right and the bears are right. Now, most people passively invest in index funds. So I don't think this down move is going to happen. Now, we actually call this exactly to the T. Long lift, long snap, long PayPal. And we caught Ethereum at the lows. We caught PayPal exactly at the lows. That could be a 10-year low on PayPal. Right, so we caught that exactly. It's a perfect descending falling wedge, went to its target, 100, followed by the gap fill. That's it. That might be a 10-year low on PayPal, but guess what? That's also a 10-year high on PayPal too. When I say 10-year high, by the way, really I mean 8-year high. I'm just saying this high won't get taken out before the year 2030, right? That might very well be a 10-year low, but that's also a 10-year high. So major damage has taken place here. It's only because of Apple and Microsoft this market hasn't gone down more. Now, similar to what it's done before. So we've seen this before. Apple and Microsoft now control 13.6% of the entire market. So as Apple and Microsoft go, especially Apple, the S&P is going to go. Now, this down move is probably not going to happen now, okay? If this down move occurs, and the reason we're getting sell-off today is only because it's OPEX expiration, right? It's the expiration of multiple futures and options contracts, which occur on the third Friday of the month. It's a $2 trillion expiration today, okay? So it's a significant expiration. These expiration sizes are just going to increase. That's obviously a 3-wave into here. So the only count that makes sense is basically an ending diagonal. So in effect, it's going to be a 2-year topping pattern. So this will likely end up, let's say 5,400, then do something like this, then do something like this, right? And that'll be how it's going to end. So in effect, I know this is not technically correct. You shouldn't label an ending diagonal as A, B, C, D, E. As per masterclass, it should be 1, 2, 3, 4, 5. But I like to do it as A, B, C, D to show me the corrective nature. Things can only ever be impulsive or corrective unless, of course, you're dealing with a diagonal. Diagonals are very, very tricky. So whilst most things won't make a new high in the next 10 years, the S&P will. This is most likely what's going to happen now. This is now my primary count. I see no narrative going into Q4, which is a very, very bullish time seasonally in a US midterm election year. We identified this at the start of the year. I knew in January, the first 6 months of this year was going to be pretty difficult. And we got a huge move down, okay? I just don't see any narratives now to take this market lower. We've done the inflation thing, we've done the recession talk, and we've done the whole corporate earnings game, okay? This is effectively going to end like this. We're going to make a new high here before the end of the year, probably around Easter time, have a quick dump to 4,200, 4,400. Everyone's going to think, right, that's it. This is the big one. We have one final move up. Probably the next, I'd say this entire pattern will take at least 6 months to play out, if not 9 months, and then we have the move down. So there is no doubt in this situation, an ending diagonal, that will definitely be the start of the grand super cycle bear market, okay? But obviously, we're now just extending the time. And all they're doing is kicking the can down the road. Apple will lead that decline in this type of situation, okay? Like I said, the market could just follow 2008. It's actually unbelievable how similar the fractal is to 2008. But what is absolutely incredible is the amount of bearish positioning out there. And that kind of bearish positioning is almost as bad as it was at the pandemic lows when I called for a melt up, okay? The big part of this melt up's done, by the way. So we nailed that call. We called the exact low. And we said the Nasdaq's going to go 14K, which it did. This is not really a melt up, really. It's going up in a corrective sequence. There's no way anything other than Apple and Microsoft is going to make a new high, okay? Just because S&P might go to 5,600 here, it doesn't mean Bitcoin's going to go anywhere near 69K. Of course it isn't. Doesn't mean Ethereum's going to make a new high. I mean, I think Ethereum might actually be a good buy here pretty soon in the next couple of weeks prior to its merge. Maybe it gets down to around 1353 or so. But just because the S&P is going to 5,600 doesn't mean that the stocks are going to follow. Effectively, this will then be a 2-year Wyckoff distribution. And this makes a lot of sense, right? This will trap a lot of retail traders. But I cannot explain why the positioning is so bearish. That kind of bearish positioning of institutions and retail traders who almost always get it wrong. That kind of sentiment and positioning has to get reversed to the upside. There's no way this market can now sell off. And if it is going to sell off, it has to be today. It has to be next week. I just don't see it happening. For this market, after all the damage that's been done, with that amount of lopsided positioning to now fall, anything more than, let's say, 3-4% is going to be very, very unlikely. Frankly, it's a buy the dip market now, only on the S&P and maybe Apple. So this is very much dependent on what people are playing. Are you long? Are you short? Are you trading? Are you investing? This is a 2-year topping pattern. It's going to end in a big way. And in this circumstance, all the previous targets are going to get hit. 100%, okay? Any one of you, which might be many of you, there's a lot of heroes out there who follow this YouTube channel. That's okay. I undercover follow all of you on Twitter and do the opposite, so you know who you are. Anyone who uses market profile, you know very well, right? If you use advanced market profile software, there's a lot of, let's say, how we can say, poor structure going from the lows there all the way to 3-4K. We all understand that. I've actually developed a masterclass for those wanting to know auction market theory. There's no need to pay for fancy market profile software because TradingView allows you to take advantage of all of that software in a very cost-effective way if you know what you're looking for. But for those of you who are looking at market profile, we understand the structure. This entire move was a short squeeze. There's untested VPOCs. There are gaps down there. We know eventually the S&P is going to repair all of that damage. In this 2-year Wyckoff distribution, rising wedge, ending diagonal pattern, it frustrates the bulls and it will eventually frustrate the bears too. Although I suppose I've said that the wrong way around. It's going to frustrate the bears, who are going to short this market all the way to all-time new highs. That's going to lead to a lot of FOMO of bulls. Then we're going to come back down. Then we're going to go back up. And then we're going to start off, technically a catastrophic collapse. The point I want to make about the market profile software is this area between 2 and 3K, eventually that's going to get repaired. In this circumstance, there's no doubt S&P is going to go very, very low. There is technically nothing wrong with it taking out 666, but let's just make a conservative target as per recent YouTube video, 1260, right? So there's no doubt sooner or later we're going to have a catastrophic collapse here on the S&P. I just refuse to believe it's going to happen 6 weeks before Q4. Unless, of course, there's a major black swan geopolitical crisis, which 6 weeks before an important election, which everyone's looking at, I just don't see that happening. This is the most clear count to me now. It's an ending diagonal. It cannot be a normal move up. It cannot be a normal impulse, by the way, because obviously if it's a normal impulse, this S&P is going to go well above 10,000. That's not even mathematically possible because nothing other than Apple is going to make a new high. So this would only be possible if Tesla and Google and Facebook hadn't topped. So of course that's impossible. How can the wave 3 be up there? So it's a really contracted, massively extended wave 1 ending diagonal, okay? As we know, there's a YouTube video on this, by the way, for those who want to know more. Wave 4 or wave D goes into the territory of A and B. Wave 1's usually the longest, and wave 3 can't be the shortest. So 5400, well, I've got that. Okay, let's call that, I don't know, let's call that 5300, then a move back down to, let's say, 4400, then a move towards, 5600. Maybe we top at 5666, okay? And then we set off a series of 1 2 1 2 1 2s, and then yes, all of this entire structure is going to get reversed and repaired, and we're going to go to at least 1260. So it's a very difficult time. Anyone who's fundamentally bearish on this market, they have a right to be. It's just that fundamentals will always get overtaken by market dynamics and technicals, by the way, and the technicals are obviously, we're approaching the 200-day moving average, so hedge funds will now be forced to chase this market, right? Because unlike retail traders who aren't forced to be in any position, hedge funds are not like that, okay? Hedge funds, if they don't invest, if they don't buy or do anything, then their clients run away, right? So they're not allowed to be out of the market for too long, right? They've missed this entire move based on positioning data that I have access to, that we cover in the group twice a week, right? Which is the 200 here. Let me get off the weekly. Right. So it's very clear that this little sell-off here is a fake sell-off. Frankly, you'll be lucky to get 4K on the S&P here. I just don't see it falling. Any move into this kind of level is a buy the dip opportunity. I refuse to believe retail traders are right, and I can't believe everyone has the same count as me. And as long as everyone has this count, it has to be wrong, right? Because we've been doing the opposite of everyone for 14 years here and 5 years on YouTube. If everyone has the same count as I do, it has to be wrong. By the way, this could still be right, because I'm saying it's the C leg of a diagonal. As we know, the diagonal has to break down in 5. So this could still be corrective, right? Let's just say, hypothetically, this little count I have here, let's put that in blue, let's put that in red. We know it's that diagonal. However, this is not an X wave going down. So everyone on Twitter is calling for this. That can't now happen. Whilst technically it could happen, and fundamentally it could happen, market dynamics do not allow this to happen mathematically, statistically, or otherwise. You cannot have hedge funds massively net short and retail traders massively net short. They never get it wrong. Hedge funds are just retail traders who are wrong in much larger size. Okay? So the market dynamics don't support this. That's basically what I'm trying to say. That's the whole point of doing this video, getting it out there, that I've now changed my account. So yes, I do not see now these June lows getting taken out for no other reason other than the fact that everyone has a bear market rally count, so it can't be a bear market rally. There's no way ever in stock market history the consensus could be right. Okay, good. Now, the other thing just to mention is, obviously, we've covered this numerous times on this YouTube channel because we've had quite a lot of inversions. But let me just, put it out there. Try to explain why exactly, we think this is going to happen. Well, it's very simple. An inversion of the yield curve, amongst many things, mind you, can sometimes cause a bit of euphoric rise in the stock market, right? So we've shown this before because we've had quite a few inversions here since we've been on YouTube, and very simply, it's like this. So it's not like we haven't seen this before. Let's just get a little zero line here. So it's 10s minus 2s, and as you can see, the first hit of the line is a bit of a fake little sell-off here, long-term capital management. Then it bounces up. Then during the inversion time, the market can still have a little bit of a choppy ending diagonal kind of rally there. Hit the inversion, bit of a fake sell-off there, May 06. Then we get a bit of an inversion. Still, it gets a bit choppy. So that's what I'm expecting. There's no way this can end in a proper blow-off top impulse. It's going to end like in a bit of a choppy way. We inverted here back in June 2022, about 7 to 8 weeks ago, maybe even less. From the point of inversion, proper inversion, so this one wasn't a proper inversion really, was it? This is the proper inversion, a proper smash through this level, right? That's a proper move down. It's still 10 months to the peak. So that is all I have really. That's my take. Like I said, it's a very risky market. Only Apple I have any confidence in making a new high. I just don't think, I mean, you look at things like, I mean, I don't know, you can look at anything really, you know, Netflix, that's a 10-year top up there, right? So great damage has been done, and I think everyone who's correct in their bearish stance is perfectly correct. There's nothing wrong with being bearish. It's just that market dynamics, they have a funny way of squeezing people out of their position. So S&P is technically a buy the dip market only because it's the index. But yes, everything else is pretty much bearish. Only the S&P and maybe Apple are going to make an all-time new high here. Obviously Netflix, you know, that's just making a counter leg, B leg. And then once the S&P rolls over, you know, Netflix could do this over the next 6 to 9 months. Just do this, right? Now, very quickly, because I know we cover a lot of Bitcoin, I think Bitcoin's very difficult to decipher now. And the reason is because my count on the S&P is an ending diagonal, as I've just said. Now, let's just bring up, so let me just make it clear. My count is now something like this, yeah? A, B, this, 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 then it's the move down, right? Now, under no circumstances can Bitcoin make a new high just because the S&P is. And this should give you all the information that you need in terms of Bitcoin being bearish. As far as I'm concerned, pandemic lows on Bitcoin are now a 100% probability but all we're doing is we're just pushing the time to the right a little bit. It might not happen sooner than, let's say, Easter 2023. It's going to take a little bit of time to get down there because obviously this move down here, which I'm forecasting now for, let's say, late 23, 24, certainly by 2024, you know, I called a top in the property market Q3 23 in the US and much of the Western world because the US controls that market a lot. You know, real estate is going to have a lot of issues here going into that top. I mean, technically in some parts of the world, you could argue it's already topped, regardless of the supply and demand dynamic. So the business cycle, we're max 2 years away here, maybe 18 months. This little sell-off here, which I'm forecasting now for 2024, I consider that a pan sell-off, everything. So between here and let's say this point in time, let's just call that, I don't know, 1 year away. You know, just because the S&P, I now feel, purely because of positioning, if nothing else, is gonna make a new high. That doesn't mean Bitcoin's gonna do this. Bitcoin now is actually even more bearish than it was before. And now I think there's a 100% probability we now take out the pandemic lows. So unfortunately, from current price, 25,000, all the way down to, let's say, 3K now, right? I called for 2K when it was here, by the way, right? Don't for 1 second think 2K can't happen. But let's not go to 2K right now. Let's go 3K. This might take a while to get down there, as in another year to get down there. But it will eventually get down there. I just think Bitcoin is very difficult to decipher right now. I honestly think it's very hard to make a genuine call on Bitcoin now because my count on the S&P is bullish. S&P controlled by Apple and Microsoft. Microsoft drags up the Nasdaq in some kind of corrective pattern, and then basically Nasdaq is correlated to Bitcoin. So it's all rather confusing. But longer term, we're definitely going to go to 3K. I honestly don't know, though, the exact pattern that we're going to form from 25K to 3K. That is my honest take on Bitcoin. Of course, the price changes very, very quickly, and we cover it twice a week. But I also just wanted to get this video out there to explain my actual count for the S&P now. My actual count for the S&P is that it does indeed make a new high in a corrective ending diagonal leg, and all we're doing is setting up an even bigger crash coming in 2024, maybe late 23, but to get bearish this market now before Q4 makes absolutely no sense, because statistically, midterm election years, it's very hard to get bearish Q4, and we have stats on that going back to 1931, which I identified way back in January. As far as Bitcoin is concerned, it's very difficult. Obviously, if the S&P is going to go up, Bitcoin might still get a bid. It might not take out 17k right here, right now. It's very difficult. I think Bitcoin ultimately is still a risk asset, and the S&P is an index. Bitcoin is not an index. So the S&P can be manipulated higher, but Bitcoin is very, very difficult to actually get a good read on it. I consider Bitcoin much like Tesla, and it's in a multi-year bear market here, and it's going to go much, much lower. The short-term count is honestly very, very difficult. Anyway, that's my take. I suppose we can fancy having a look at Ethereum here. Difficult one. Is it immediately now? If the S&P is going to go to 4,800 and beyond, is that immediately going to happen before the end of the year? I don't think so. I think this is some kind of A leg. Maybe we get a little B leg, then we get a little C leg going into 2023, and then we end up doing this. This is not going to be easy, by the way. Trying to decipher what Ethereum's going to do over the next 6 months is going to be very, very hard. Longer term, there's no doubt we're going to see sub 500 on Ethereum way before we see these highs. These highs are multi-year highs, and they're not going to be seen for a while. So that's my just eyeballing the situation. But like I said, crypto is a bit more difficult. I mean, we could just fall down from here, frankly, but I get the feeling there's too many shorts across the board, and going into Q4, probably not the best idea. So that's my take. Finally, ES. So we call this exact move. We run these poor highs. Where could the ES come back and consolidate? Well, I mean, there's a demand block there, so that's quite simple. That's very much possible. That's the high of the block, and that's the start of the block, right? Why is it a demand block? It's a red candle in the midst of a whole bunch of green candles that is basically prior to a big up leg. So this is where institutions were accumulating before this leg. So this little move down might just go into here, chop around, and then do this. Okay. So that would be just my eyeball take on the ES. But I wouldn't be getting too bearish here, though. Unless it does this. Then you can get bearish and you can aim for this little high here. But honestly, I don't see that happening now. This is very, very unlikely, because everyone's got this count, so it can't possibly be right. Anyway, I'll catch you guys soon.